welcome to the Ichimoku daily analysis for the S&P 500 for Monday, September 10, 2012. Well, a very large black body candle today and quite a change of momentum to the downside, with the sellers taking very strong control of this market. The sellers have been in control for almost the entire day by opening up towards the low and closing at the low. A very bearish day, where the sellers have shown a lot of commitment on the trading day. Previous day's trading, we had a small white body candle as the market interacted roughly with this area of resistance around the 1440 level that I mentioned previously, and the market traded to 1438.74, so we traded very close to there, and that has obviously had its influence. This is a potential Japanese candlestick reversal pattern. It's a potential bearish engulfing pattern, and that's where the body of the current candle completely engulfs the body of the previous candle with a largish black body, and the previous body being a white body where the buyers had momentum, and now all of a sudden a very large change of momentum for the trading day to the downside. Now, as with all Japanese candlestick reversal patterns, we do require confirmation of the change of trend. Change of trend would be, in this case, a candle with a lower high and a lower low. At the moment, the trend here is still technically up, with the market making a higher high but a lower low, and that in itself does raise doubt about continuation of the trend to the upside. The sellers were strong enough to take out the low of the previous candle, while the buyers were strong enough to take out the high, only just. And it suggests a lot of indecision in this market, but combined with the very large black body candle, this market certainly is set up for that change of trend. Now, in terms of the Fibonacci extension, we're examining the current first time frame uptrend in relationship to the previous time the market was trending up, and now for the second day we've seen the market test to the 261.8% level and be rejected from there for today. Previous day's trading, we had the market close up at that level, and now strong rejection from there. So that also sets the market up for that potential change of trend. We have the confluence of the Fibonacci ratios around that very strong, important resistance area. And the Fibonacci retracement of the prior downtrend, and we're now in expansion mode, has tested almost to that 261.8% level, and this market is set up for that potential change of trend. In terms of Ichimoku, we still have a bullish market in all three time frames. We have the market trading above the cloud, so we're bullish in the long-term time frame, trading above the Kijun-sen, so bullish in the medium term, and above the Tenkan-sen, the green line here, so we're bullish in the short-term time frame. The angle of the Tenkan-sen has rolled over slightly, and it does suggest that the market has lost momentum, and obviously with this black body candle we know that it has. And the first area that we should be looking to for potential support is the 1422 area, previous resistance area, and then this area around the Tenkan-sen. The Tenkan-sen will potentially hold its very strong support around this 1415, so that's an important level that we should be looking for. Below there, the round number 1400, if the market does trade down to there, has potential to offer support. Also, support that's close by to the market at the moment is just here at the swing high around roughly around 1427, 1426, and the market may interact with that for tomorrow's trading, but could also probe down to the 1422 area and to the Tenkan-sen, as I've mentioned already. So overall, in terms of Ichimoku, a very bullish market, a market where we've now seen the buyers lose some commitment and lose control of the market in the very short time frame. I do expect that the trend will change, but we have very solid support down below, extending down to 14, 15 and even below there. So we should look to the market to pull back, not a substantial amount, but to these levels, and then wait for the buyers to come in for the market to continue the major uptrend on its way in perhaps a day or two or towards the end of the week.